Let's turn our attention now to the investment, and I want to start off with the profitability of the company. And this is really focused more on equity crowdfunding than on rewards-based crowdfunding. You want to start off by looking at the unit price that the company is charging for its product or products, and the extent to which it is discounting in order to get those products off the shelf and into customers' hands, because this will directly impact the margins that the company is achieving, both at the gross level and at the net level. And you need to look at this quite carefully to really understand bottom up how the company makes its money, because this is the core of its profitability. And then you want to understand the extent to which sales are growing, because you want to get some idea of what the recent past is, because that's your best indicator to evaluate whether or not the forecasts are going to be accurate. Well, they'll never be accurate, but they may be realistic, and you want to make sure that they're at least some indicator of what you might expect will happen in the near future. Is the company discounting in order to shift its products? Now, this could indicate that the product is in a very competitive market, or the company is simply struggling to sell. And you really must understand, if you can find out from the company, exactly whether they're achieving their recommended price for their product, or whether they're having to discount it to get it out there. You need to think of the profitability of the company as well in terms of the time frame, not only of the time frame that the company has existed to date, but of the time frame of the forecast going forward, and the time it's going to take for the company itself to become profitable. And that may be several years. And this is the core to this whole area of crowdfunding, that you are looking at quite extended time frames, and you are in quite an illiquid investment. The scalability of the business is, of course, the key to growth, and it may also be the key to profitability, because if you can produce lots more units of product very easily, as you can, for instance, with software, as opposed to a manufactured item, then the profitability of your business is going to be that much greater, and therefore the value of the business will be that much greater. So spend some time really trying to understand the profit and loss account and the profitability of the business, because this is the core of the profitability of the investment you're going to be going into. And if the business is profitable and the investment is profitable, then over a period of time your returns will reflect that level of profitability.